Do you want to achieve financial freedom? That's not just a random question. It's a rallying cry to all those who dream of a life unburdened by financial stress. Financial freedom, my friends, is not about being rich or amassing wealth. It's about having the ability to make choices in life without worrying about monetary concerns. It's about being in control of your money, not the other way around. Imagine a life where you are free to pursue your passions, spend quality time with your loved ones, or even take that dream vacation you've been putting off because you were too worried about the bills. That's what financial freedom can bring you. But achieving this freedom isn't a walk in the park. It requires knowledge, discipline, and strategic planning. And that's why we're here. Our main objective is to arm you with the tools and knowledge you need to navigate the complex world of finance confidently and strategically. In this Imperial guide, we'll cover a wide range of topics, from the basics of budgeting and saving to understanding how to grow and protect your wealth for the future. We'll help you understand the systems, poor decisions, and bad habits that can keep you financially dependent and stagnant. But it doesn't stop there. We'll also share with you how to maximize your dollar while simultaneously increasing your income potential. Because, as we like to say, before you start thinking about your passive income, you must max out your active income. And remember, your income is the sword you will use to fight for your financial freedom. It's time to sharpen that sword and step into the arena. So buckle up, friends, and prepare for a journey of financial empowerment. Because every journey begins with a single step. And understanding what financial freedom is our first step. Now that we understand what financial freedom is, how do we achieve it? The first step towards financial freedom is understanding the basics of finance. Let's dive into the core principles of finance, which are income, expenses, savings, and investments. These may sound intimidating, but they're really quite simple once you break them down. First, let's think about income. This is the money you earn. It could come from a job, a side gig, or maybe even an allowance. It's the fuel that powers your financial engine. Without income, it's hard to cover your expenses or save for the future. Now let's talk about expenses. These are the costs that you incur: your rent or mortgage, groceries, transportation, entertainment, and so much more. It's crucial to keep track of these and make sure they don't exceed your income. Why? Because that's when debt starts to creep in. Next up, we have savings. This is the portion of your income that you set aside for future use. It's like a safety net that can help you in times of need or allow you to afford something special down the line. A good rule of thumb is to save at least 10% of your income. But remember, the more you save, the bigger your safety net becomes. Lastly, we have investments. This is where you put your money to work for you. Instead of just sitting in a bank account, your money could be growing in value through things like stocks, bonds, or real estate. Investing can be a powerful tool for building wealth, but it also comes with risks. So it's important to do your research and understand what you're getting into. Think of these principles as the pillars of your financial house. Income and expenses are the foundation, while savings build the walls and investments raise the roof. If one pillar is weak, the whole house could crumble. So it's important to give each one the attention it deserves. Once you grasp these basic principles, you're ready to take the next step towards financial freedom. With the basic knowledge of finance, it's time to build a solid financial foundation. Now this might sound like a monumental task, but fear not. It's just like stacking bricks one by one to build a sturdy wall. Let's start with the first brick, which is creating a budget. This is essentially your financial roadmap. It outlines your income, your expenses, and guides you on how to allocate your money. Think of it this way. If you were embarking on a journey, wouldn't you want a map to guide you to your destination? That's exactly what your budget does for your finances. Now, on to the second brick, saving money. Saving is like creating a buffer between you and life's unexpected twists and turns. It's that little nest egg you build up over time that can help you weather financial storms. Remember, a little saving today can lead to a lot of comfort tomorrow. Next, we have the third brick, reducing unnecessary expenses. This might seem tough, especially when you're tempted by that shiny new gadget or that trendy outfit. But it's all about differentiating between your wants and your needs. Cutting down on unnecessary expenses helps you stretch your income further and save more. Now, let's talk about the cement that holds these bricks together. An emergency fund. This is a stash of money set aside to cover the financial surprises life throws your way. It's like having a financial safety net that provides stability and peace of mind. Building a solid financial foundation isn't a one-time task. It's a continuous process of adjusting your budget, increasing your savings, and managing your expenses. It might seem challenging at first, but with patience and discipline, you'll be able to construct a strong financial base. A strong financial foundation sets you up for success in your journey towards financial freedom. Imagine this foundation as your launchpad. The stronger it is, the higher you'll soar in your financial journey. So let's start laying those bricks, shall we? Now that you have a solid financial foundation, let's focus on growing your wealth. Imagine you're planting a tree. You've nurtured the seedling, watered it, ensured it's getting enough sunlight. Now it's time for the tree to grow, to reach towards the sky, and maybe even bear fruit. This is similar to your financial journey. You've understood the basics, built a foundation, and now it's time to grow your wealth. So, how do you do that? There are multiple avenues to explore, like stocks, bonds, and mutual funds. Stocks are a type of investment that represents ownership in a company. When you buy a company's stock, you're buying a piece of that company. Now, stocks can be a bit of a roller coaster ride, with values going up and down, but over the long term, they have the potential for higher returns. Bonds, on the other hand, are like IOUs. When you buy a bond, you're lending money to the issuer, who promises to pay you back with interest. Bonds are typically safer than stocks, but the potential for returns is usually lower. Then there are mutual funds. Think of these as a basket of different investments, like stocks and bonds, all bundled together. They allow you to diversify your investments, spreading the risk and potentially increasing your chances of returns. But there's one magical element that ties all these investments together, and that's compound interest. Simply put, compound interest is earning interest on your interest. It's like a snowball rolling down a hill, gathering more snow and getting bigger over time. The longer you leave your money invested, the more it can grow. Remember, investing isn't about getting rich quick. It's about making consistent, informed decisions over time. Every investment comes with a level of risk, but with knowledge and patience, you can navigate these risks and grow your wealth. Investing wisely is a key strategy in achieving financial freedom. Because when you grow your wealth, you're not just building a bigger bank account, you're building a better future. As you accumulate wealth, it becomes equally important to protect it. So how do we go about protecting our hard-earned money? Well, there are 3 key strategies that can help safeguard your wealth against potential risks: insurance, diversification, and having a long-term financial plan. Let's start with insurance. Insurance, in its purest form, is a tool designed to protect you from unforeseen financial calamities. With the right insurance in place, whether it's health, home, auto, or life insurance, you're essentially transferring the risk of a financial loss to an insurance company. This means if something unexpected happens, you won't have to dip into your savings or investments to cover the costs. It's like having a safety net, ready to catch you if you fall. Next, we have diversification. In the world of finance, diversification is akin to the old saying, "Don't put all your eggs in one basket." By spreading your investments across various assets, sectors, and regions, you can reduce the risk of a significant financial loss if one of your investments performs poorly. It's about balancing your financial portfolio to ensure your wealth isn't tied to the fate of a single investment. Lastly, let's talk about the importance of having a long-term financial plan. A well-thought-out financial plan acts as your financial roadmap, helping you navigate through the ups and downs of the financial world. It helps you stay focused on your financial goals while also providing a buffer against short-term market fluctuations. Remember, protecting your wealth isn't a one-time event, but a continuous process. It requires regular review and adjustments to ensure that your financial protection mechanisms are in sync with your evolving financial goals and circumstances. Financial freedom isn't just about making money, it's about protecting and growing it over time. So, take the time to secure your wealth. After all, it's not just about how much money you make, but how much of it you get to keep and grow.